What's going on, everybody? It's Matt, aka the Lumberjack Landlord. Wanted to come to you. I know it's crazy, but wanted to bring this news to you as soon as I heard it. I've been hearing some rumblings over the last couple of days from a lot of the different bankers that I work with, talking about some of these bigger banks saying, hey, we're going to start pulling back. Well, guess what, guys? We now have confirmation. They're not just pulling back. They are actually talking about it in the press. Just recently, Reuters published this article. I think you guys should absolutely take a look at it. Look it up. Banks are now starting the process to stop lending. Capital requirements and what they're required to hold onto for cash reserves are drastically going up. With the ever increasing rates, there is a lot of concern out there now with the banks. So this is the thing that I told you guys was coming. I told you that when things start to get bad, banks stop lending. So if you have HELOCs, if you have a deal that you haven't gotten approved yet, or you're trying to work through the process, guys, all of these deals are now subject to not happening. Make sure if you're putting deals together that there is a covenant in the contract that talks about the fact that you have to be able to get X rate or that it has to be financed. You must have that in your contracts. Do not be cavalier. This is one of those things that could absolutely stick you, and at best case scenario, you lose your deposit. So these big banks are absolutely 100% pulling back. This article again came out from Reuters. It just came out a little under an hour ago. JP Morgan, Citigroup say higher capital requirements may hurt lending. Let me give that to you in normal non-bank speak. It's going to hurt lending. This is the stuff that we've been talking about for literally the last 6 to 9 months, saying rates will continue to rise. The environment will continue to get more difficult to operate in. And now people will start getting even more no answers. Now it's going to be one of those cases where so few yeses are given, likely you are not going to be in that group. So continue to watch this ever developing situation. Be patient in the different properties and projects that you're looking at, because this does become one of the turning points. I believe that there are 2 more additional rate hikes coming. I think that that will continue to obviously raise rates. It's going to take time for things to settle and for then the margin gap, i.e. right now, this margin gap is massive. We're talking about some rates that are literally 400 basis points higher than what the actual cost of that money is. So I would absolutely caution you, if you are looking at deals right now, keep in mind that you must have in that contract, the financing contingency. Otherwise, you could be stuck and it could actually cost you a fairly sizable deposit. So as I always say, we try and create great and fantastic content for you. Please make sure you hit that like button and that you would consider subscribing. But again, this article just put out by Reuters, JP Morgan, Citigroup say higher capital requirements will hurt lending. I'm telling you guys, this is what's part of the contraction. Banks stop lending or they shorten who they lend to. That means that much less capital is available to be borrowed. So appreciate you guys watching the channel. Appreciate you guys and all your feedback. Let me know what you think below, because I would love to get your feedback. Again, this is part of this process that we're going through, and now the bumpy ride really continues. So look forward to seeing you guys in the next one. Again, don't forget Lumberjack Landlord on Fridays. We'll have Mike Zuber, one rental at a time. Excited to have him as a guest and actually talk to him about what this actually means in the market and how it's going to impact our deals moving forward. Thanks so much, everybody. Have a great day.